Well, I'm the one who stands before you and the end of the day, which is an easy place to be. So I'll try to keep it interesting and not too long. I was asked to talk about sort of the global experience of microfinance. That's a pretty broad topic, and what I thought is maybe easier to tell it through stories. So I came up with 4 stories. Or I call them tales, the SIDBI Congress tales. And let's go. Oh, no, not those tales, sorry. So I'll start with Peru, which I call the tale of the fat groundhog. Kyrgyzstan, the tale of the cautious owl. Jordan, the tale of the grumpy cat. And Cambodia, the tale of the Russian hare. I think the average age of the audience probably should go down by, 50 years or so. So we'll be in kindergarten and this will be much better. But maybe it's because I have small kids. Anyway, it should be more fun. But before I go into the tales, a little bit about what markets have in common. So the work I do on the Mimosa project specifically and some of the other research that I do tends to look at markets as a whole. It doesn't so much look at individual institutions, but how do markets operate, how do markets grow, what are the types of challenges that markets face. I started this almost 10 years ago. In fact, one of the very first things I did was a study of Andhra Pradesh before the crisis, suggesting that it was already quite a saturated market. And one thing that we've noticed in the Mimosa project and the data that we collected is that these markets have one thing that's a very strong tendency that's in common. And it's really this chart here, these bubbles. So what this is if you graph the penetration rate, which is just how many borrowers per adult, per 100 adults there are. So for example, if 13% of the adult population are borrowers, that you would be at the 13 on the x-axis. And on the y-axis, it's the average loans per borrower, so which is a basic metric of multiple borrowing. And so what you see is this very, very strong relationship that as markets have higher penetration, as they grow, the number of multiple loans grows alongside. In theory, it seems like it should be possible to be there, which is to say you have high outreach, but relatively modest multiple borrowing. In practice, it does not come up. Right? You just don't see it in the data. This data is from multiple countries, so I'll go through a couple. You have Morocco here on the very bottom, really low penetration market, relatively low multiple borrowing. You have Peru and Bolivia in Latin America, really much higher multiple borrowing rates, also much higher penetration. These, by the way, the dots are at the regional level for the country, so at the provincial level. Here, for example, is Cambodia. In 2015, here's Cambodia a year later. You can see that I'll talk about that later. It's something interesting. And this here's India, not all of India. The large dots are all the states. The small ones are the districts of Maharashtra, Tamil Nadu, and Uttar Pradesh. This is a study we did earlier this year. What you see at the end of the day is India is kind of in the middle of this pack. So you have high multiple borrowing levels in Latin America, and Peru especially. Some of the other markets we've seen would probably be in that range would be Nicaragua and Mexico, but the data there is not quite as strong. So this is really solid data from the credit bureaus. And then you see Cambodia and Kyrgyzstan, which I'll talk about later, below the line, and India is kind of in the middle. Also, what's interesting is India goes pretty far out. So if you look, well, you can barely see it, but if you look here, right, this is the highest penetration we have in our data set of anything, and that's mostly Tamil Nadu. But I won't talk about India. I'm going to talk about the tale of the fat woodchuck, which is in Peru. So Peru is a market that's one of the oldest microfinance markets in the world. Goes back to the very, very late 70s. And early 80s. It's also the very first market that started to commercialize. So the very first commercial institution, microfinance, was in Peru. And it's as a mature market, this is data from not very most current data, but it hasn't changed that much. It's not really growing very fast anymore. So every year it's growing in single digits, 6, 7%, 8%. Along with that comes an interesting little pattern, which is you have really high delinquency and write-off rates. So delinquency being the yellow bars, the write-off being the green. And in Peru, what's interesting is one of the things that we do as part of the study is we do a field survey, and we ask people, what happens if you take a loan, if you borrow a loan from a bank or MFI or a financial institution, and you don't pay it back. And usually we ask about the collection process, but we also ask about, can they then go to another institution and borrow again, take a second loan? And usually what people say is, oh, no, we can't, because the second institution will find out from the computer that I already have a loan, or they'll find out from the internet that I already have a loan with somebody else. And in Peru, everybody, not everybody, but a substantial number of people said, not only do I have will they go on the computer and find out that I have a loan with somebody else, they actually said, oh yeah, they're going to get it from InfoCred, which is the name of the credit bureau. So the level of awareness among borrowers is so high that they actually know the name of the credit bureau itself, and they know the consequences of what it means to default. So when people are defaulting in Peru, this is as strong a sign of over-indebtedness as you can get. Right? They're not defaulting because they don't know, because they think it's okay. No, they really are defaulting because they have no other choice. So what this comes to show is you have a fairly stable, this is a 10-year, 2004 to 2015, this chart. A stable pattern where default rates are high, delinquencies are high, write-offs are high, and yet the market continues. And as of 2 years ago, in the credit bureau, 8.4% of all adults, not just borrowers, but all adults in Peru, had a write-off record in the credit bureau. Right? So that's a pretty high exclusion rate, because they can't go back and borrow again. And then we did another sort of deeper look, and we looked at the regional level in Peru. And the regions with the highest level of penetration were also the ones that had the highest level of write-offs in the credit bureau. So to me, it sort of suggests the market that's kind of reached that level of saturation. You cannot grow more. You cannot grow more beyond the growth of the economy itself without over-indebting a significant number of people, and that's essentially what they're struggling with. But the controls and the structure in the market are such that those write-offs and those defaults allow the market to kind of let out the steam. So there is no real risk of a crisis or a repayment bubble. And that's kind of the reason I call it the fat hedgehog or fat woodchuck. It's fat and slow, but you avoid disaster anyway. But that doesn't mean the clients don't suffer. All right, so another story. This is the tale of from Kyrgyzstan, the tale of the cautious owl, maybe the exact opposite of Peru. Kyrgyzstan is quite a younger market. Actually, Jason was telling me earlier that he knows Kyrgyzstan from the 90s, that he's started work at one of the MFIs there at Finca in 98, all right? I don't know Kyrgyzstan that far back, but again, we've done some studies there, and there are two interesting things that I want to talk about in Kyrgyzstan. So one is, you can barely see, oh, right. One is multiple borrowing. There's an interesting thing that happened. So this was Kyrgyzstan 2011. So you see fairly high levels of multiple borrowing and modest penetration. This is Kyrgyzstan 3 years later, 2014. All right? Something really interesting happened. Penetration increased a little bit, but multiple borrowing went way down. So average number of loans per client went from about 1.5, 1.5 to about 1.2. And that really interesting thing is the first number comes from a study that was done, an over-indebtedness study that was done by, I forget who, but not important. And one of the recommendations of that study was that the government consider regulations to reduce multiple borrowing. And so what the government did, what the central bank did, is they implemented regulations that said, if you are a financial institution, an MFI in this case, and you give a loan to a client who already has a loan with somebody else, you must take additional loss provisions against the loan that you're giving. There's a pretty strong incentive to reduce multiple lending. It didn't go away. There's still multiple lending there, but it's at a much lower level. So I found that quite interesting. The second example is dealing with foreign currency. This chart, I apologize, it's a little more complicated, more going on there, but there are two things here. So Kyrgyzstan is one of the Central Asian economies that is exposed to a lot of foreign exchange flows. You have a lot of remittances, people working abroad, and a lot of Central Asian economies have financial institutions that lend in foreign currency, usually dollars or euros. In Kyrgyzstan, you can see in 2016 there's a sudden jump in that red line, which is default rate, delinquency rate on foreign currency loans. And what happened was there's a huge devaluation there of about 30% in their currency. And yet the loans denominated in local currency, the delinquency rate barely budged. It just didn't move. That's the green line below. But there are two other things that are happening that put this in perspective. The green bars is the portfolio in local currency. The red bars at the top is the portfolio in foreign currency. There was very, very little foreign currency lending in Kyrgyzstan because for years, going back to Jason's time even, that was not allowed for MFIs to lend in foreign currency, and as a result, the number of defaults is quite limited, and institutions were really insulated from that macroeconomic shock. If you look at some neighboring countries, in Azerbaijan, the market after their devaluation at the same time was effectively wiped out. There are major MFIs there that are literally struggling for survival, and some that literally will not survive. So the takeaway from the owl story is that the owl is careful and avoids dangerous trouble spots. Sometimes it's good to be the owl. All right, Jordan, the tale of the grumpy cat. So an interesting thing about Jordan, it's a country with a very large number of non-citizen residents. So 30% of Jordanians are from abroad. They're either some combination of immigrants, migrant workers, or refugees, especially nowadays with the war in Syria. There are quite a lot of Syrian refugees who have moved to Jordan. That has interesting implications for financial inclusion. So this is a chart of borrowing among Jordanian citizens. The green bar is borrowing from formal channels, so MFIs, banks, and the pink, or the orange, is from informal, so money lenders and so on. Here's the same chart for non-citizens. Now there's something interesting. The formal borrowing is barely there. There's almost nothing there. Informal is huge. It's almost double the level of citizens. So there's huge demand for loans among the non-citizens, among this 30% of the population. That's a lot of people. And it's almost entirely unmet. So, wait a second, what's that? Oh, ladies and gentlemen, I'm sorry, that's the black swan. I heard he is coming a number of times. He's been mentioned a lot. Yeah. I was thinking about the black swan. Actually, I was thinking that if he shows up that often, probably it's not a black swan. It's probably just the cost of doing business in India. Anyway, we'll let him go. Go back to the tale in Jordan. So this is our map in Jordan. It's a map of saturation. Think of it as a map of penetration, essentially. The green areas are low penetration. The color, yellow, orange, you don't see red here, would be the high level. So this is the map of Jordan as it is for total population. This is the same map on the right for citizens. So what's happening in Jordan is you have a market among citizens that's actually getting quite saturated in parts. But it's a result of not serving this 1/3 of the population. So it's an interesting thing to think about. I would imagine that some of this might also be relevant in India as well, in different parts of the country. So the grumpy cat doesn't like guests, but when he doesn't share, he will overeat. That's the problem. Not good to be a grumpy cat. All right, last one. Cambodia, the tale of the running hare. The running hare is running from something, and he can't stop. And in the case of Cambodia, the running is the growth. The market in Cambodia has been growing nonstop for well over 10 years now, with very, very minor dips that are barely noticeable, actually. And the one thing I had shown you before in the chart is this interesting thing that we notice in penetration. So this is the penetration rate in 2015 relative to multiple borrowing. A year later, you see all of the provinces in Cambodia shift to the right, but multiple borrowing does not go up. For us, that's very strange. We looked at that, something's going on. So there's a lot of growth happening, but it's not having the same kind of effects. And so what we started looking at, okay, why is there no multiple borrowing? So we started looking at how the growth is happening. So yes, there are more clients, but the loans are also getting bigger. This is, you can see the portfolio growth, which is the bars, and you can see the number of the client growth, which is a line. And you see by 2015, the growth in clients has actually stopped and started to go down even. And that trend has continued. The number of clients has not grown since then. But portfolio growth has not stopped, not slowed down. It's been about 30 to 40% every single year. And it's because loan sizes have grown. So this is loan sizes where 10 years ago, the average loan was about $400. Now the average loan is about $2,500. It's actually close to $3,000 now. That's a level of growth I have not seen in any market in terms of loan sizes. And that's not surprising. This is a study I did of a bunch of markets in the mixed market. And Cambodia comes up at the very, very top in terms of level of growth in loan sizes. Even after adjusting for economic growth, even then, Cambodia is by far higher than anybody else. So that creates a real sort of issue for how does Cambodia address, the risks that are embedded in that type of growth. I don't want to go into all of the details, and we can deal with them in questions, but what the sector has done is they've started a self-regulatory process of sort of developing this infrastructure that relies on three things. A very clear set of metrics to monitor the risks that are behind this loan size growth, to have independent parties that actually do the monitoring, not the MFIs themselves, and then there are some sanctions in place for those that violate the norms that they've agreed to. The monitoring looks like this. This is actually a dashboard that's developed by the credit bureau. So every single MFI in the country gets a dashboard like that. And they can look at the various indicators that are relevant to the risks that are happening in that market. And the rating agencies, the SMART campaign, have adopted that dashboard as one of the elements that they look at when they look at client protection assessments. The sanctions come from investors, so almost all investors know about that dashboard. So I don't know if I can go back here. Yeah, so that dashboard, there are a lot of investors who know that MFIs get this dashboard every month, and they ask for it. And they said part of their monitoring, they ask for the copy of that dashboard, and they look at it to compare their portfolio against. Most investors have multiple investments in Cambodia, so they can compare different MFIs. They also do it as part of their due diligence itself. And then on top of that, you have the SMART campaign that actually adopted the compliance with the thresholds that have been defined as part of the self-regulatory system in order to remain SMART certified. So as MFIs now, there are 8 MFIs in Cambodia that are SMART certified. This year they're all undergoing recertification. It's been this 2-year time period, and if they do not comply, they're at risk of actually losing their certification. So there are potentially real sanctions. What the central bank will do about this, we don't know yet. That's to be seen. So anyway, the takeaway from the running hare is he can't run forever, but can he slow down safely? We don't know. So that's the tales. Thank you very much.